Hello there, I hope that you are doing well. Welcome to this new lecture of the 2025 model series. This lecture is going to be on CSD, changes in the state of delivery. Now before we dive into this lecture, I find it very important to share with you that I want you to have watched the prior lectures of this 2025 model series. And the reason why I say that and why I put emphasis on it is due to the fact that a lot of people seem to believe that CSD, changes in the state of delivery, are merely a pattern within the delivery of price. However, this is not the case. CSD only holds any significance when the prior steps of the protocol which I'm teaching to you are in play. Therefore, to simply just look for CSD is not enough. And with that being said, I would like to begin this lecture. CSD confirms the right side of the curve taking place, meaning everything which I'm sharing with you has to do with market maker models. Meaning, I'm sharing with you how you can anticipate how the right side of the curve is likely going to deliver. When we see that the left side of the curve is done delivering, CSD, a change in the state of delivery, will confirm to us that we're going to see the opposing side of the curve deliver, whether it be the buy side of the curve in a market maker buy model or the sell side of the curve within a market maker sell model. During this lecture, I will share with you how you can anticipate that curve to unfold. Change in the state of delivery, CSD. When it comes to CSD, there are two states of delivery. First of all, there's buy side and there's sell side delivery. This is important to understand because during buy side delivery, price is drawn towards buy side liquidity, which is resting above old highs. That's why it's called buy side delivery. During sell side delivery, price is drawn towards sell side liquidity. This sell side liquidity is resting below old lows. The reason why it's important to understand these two delivery functions is because you must understand that at every single given moment in time, if that is either being drawn towards buy side or it's being drawn towards sell side. Change in the state of delivery means that price changes from sell side to buy side delivery or from buy side to sell side delivery. So what CSD basically represents is that it represents the change between sell side to buy side or buy side to sell side. And that's also where you begin to see the importance of it. Because by paying attention to CSD, you are in fact able to anticipate when that right side of the curve is likely going to unfold. So when we pay attention to a visual example of this, what you can see is that we see the buy side of the curve deliver in the form of the green line. Then we see a change in the state of delivery taking place. And then the sell side of the curve delivers where the market is drawn towards sell side liquidity. This is being represented by the red line. If we would look at an opposing schematic, we could see that the red line lower represents sell side delivery. We then see a change in the state of delivery taking place and the market draws towards buy side next. So this is buy side delivery. What's important to note is that these schematics which I've created are of course simplified. They represent the bigger picture. However, within this overall bearish delivery, you are going to see short-term buy-side deliveries taking place, where you're going to see short-term retracements higher taking place. These are lower time frame buy programs which are occurring, and therefore you must understand your fractals, from the bigger fractals all the way down to the smaller fractals. This is something which we're going to touch on later throughout this model series more, because at the end of the day, you must understand that both time as price are fractal. Your job is to align all the fractals with each other. When we pay attention to this example schematic, which I've shown prior throughout this series as well, I would like you to understand that CSD confirms the bullish price cycle taking place. Meaning, a bullish change in the state of delivery confirms to us that we're going to see the market expand higher from point A, which is below here, to point B, which is up here. The moment that a change in the state of delivery takes place, that is when we can anticipate the market is going to draw towards point B. This is of course the right side of the curve within a market maker buy model, where the sell side of the curve is going to be to the left right here. When we pay attention to a bearish schematic then, what I would like to understand is that a CSD confirms the bearish price cycle taking place as well, of course, where I can see that the market is drawn from point A to point B, which is below here. What the bearish change in the state of delivery shows to us is that the market is in fact in a rush to draw towards sell side liquidity next. and therefore we can anticipate that the right side of the curve, which is in this case the sell side of the curve, is going to pan out, where you have seen the left side of the curve being the buy side of the curve. Within these schematics, I've only shown the right side of the curve, but I anticipate that if you have studied the prior lectures, which I've outlined throughout this model series, and you have also investigated charts, you should be able to follow along nicely. I hope that you understand as well that the level of difficulty within these lectures as we're proceeding throughout this series is also increasing. Meaning, I'm not speaking to a beginner anymore. I'm not speaking to someone who's just getting started. Surely you might have just started with basically getting into trading and such. You might not have been doing it for a long time, but if you have been following my guidance and you have been exactly following that, what I've been outlining you to do, so doing the homework, investigating the charts, looking for these algorithm exchanges, you should have seen already a great sense of algorithm precision by the time that you have come to this video in particular. When we pay attention to bullish market structure, what I would like you to understand that the most simple way of looking at bullish market structure is through the following perspective. Where you can see that the market expands towards the downside, we see a retracement higher taking place, and the market has one more push lower, taking out sell liquidity resting below this low. When the sell liquidity resting below this low gets taken out, what we'll be monitoring is the reaction to this level. The moment that price displaces above that old low, but more in particular above this old high right here, which set up this final push lower, that is telling to us, hey, this is a bullish breaker fractal, where you saw a low, high, lower low, higher high taking place. Therefore, we anticipate that this high is likely going to function as support on price next, because when the market retraces into that high, it has to function as support on price to confirm the next expansion leg higher occurring. Now, when it comes to this bullish market structure, I can understand that some of you are probably already like, okay, we've seen this before. Where does the change in state of delivery take place? Where does it get confirmed that we're going to change from sell to buy program? The change in state of delivery gets confirmed right here. The moment that the market trades above this high, I'm looking for the signs of bullish order flow stepping in. And what you can see within this schematic is that I've outlined a light bulb emoji. And the reason why I've outlined the light bulb emoji has to do with market maker models in general. So therefore, we're going to look at a different schematic to understand that. But the moment that price displaces above this high, I'm anticipating that we're now changing from sell to buy program. But do you understand what I outlined prior when it comes to you must have the proper understanding behind the overall process which we're adhering to, because simply looking for this fractal of a bullish breaker is not going to serve you any well. There are a lot of bullish breakers which form throughout each day, but it's not about simply recognizing the price pattern that's going to lead to the consistency you're looking for. The consistency that you're looking for is going to be a result of you having defined when this price pattern will work, and that is what I'm sharing with you throughout this lecture series. So if you investigate in depth, you are going to see exactly what's leading up to these buy programs and sell programs event first. When we pay attention to the full schematic of a market maker buy model, what I would like to see is that inside the schematic you can see that we have our drawing liquidity established right here, original consolidation, sell side of the curve, and we see the market reach our point of interest, which is outlined by this red line. Notice that the market reaches our point of interest and we then see the market reverse and draw towards the drawing liquidity. This is the buy side of the curve unfolding. When it comes to this schematic, it's important to understand that on the left side of the curve, there are going to be imbalances which will be formed. These imbalances are going to form the moment that price expands away from a prior retracement. And the reason why this is important is because the left side of the curve determines and influences how the right side of the curve is likely going to deliver. So what you can see is that I've outlined two blue boxes down here. A lower CB right here, a lower bearish value gap, and one slightly above it. Do you see how the retracement higher, which set up that final push lower, this is exactly that fractal which we've just discussed, by the way. Do you see how this high formed inside this CB on the left side of the curve? What I would like to see is that when the market displaces above imbalances which formed on the left side of the curve, I need to see these imbalances function as support on price if we are in a buy program. Therefore, this is a market structure shift pattern which is being set up. The market structure shift pattern is a pattern in price action which I've coined years ago, and it's the strongest algorithmic signature which you can look for to confirm market reversals. The reason why is because it occurs at the key level. What I would like to see is that we see a CB high, and what I'm then looking for is I'm looking for an imbalance to form inside of this price swing whilst the market trades above this high. If that occurs, I want to see that imbalance function as support on price. I need to see it function as support on price. But what if I told you that you can already anticipate this market structure shift pattern taking place before it is even formed? Because when the market displaces above this lowest CB right here, the final bearish value gap, it's already a sign of the underlying order flow beginning to change. Next to that, and this is something which I want you to think about, so what do you think is taking place if I would say that this is our previous cycle low, and that previous cycle low fails to function as resistance on price, which it should if we're going to continue bearish, and it not functioning as resistance on price is telling you something. Have you thought about that? Yep. Market maker buy model schematic, investigate this in depth, and the way I want you to investigate it is by paying attention to the left side of the curve and how it's influencing the delivery on the right side of the curve. The way that you investigate this is literally by doing one thing, and that's extending the imbalances to the right. And next to that, I want you to pay attention to whether or not these runs are originating from a point of interest which you already established prior. Pay attention to time cycles as well when it comes to previous cycle highs and previous cycle lows in particular to confirm that we're changing from sell to buy program. When we pay attention to a chart example then, what I would like you to do is I would like you to look at this area chart of Nasdaq, and I would like you to pause the recording, and I would like you to try and annotate as best as possible what you're seeing right here. Now, for those of you that are watching this lecture right away after it has been released, you will have of course seen me outline in real time that I was looking for buy side delivery to take place on Nasdaq after we showed the signs of wanting to displace higher, and the buy program was originated down here. But that's something which I want you to just ignore. Try and follow this assignment as best as possible. Pause the lecture and annotate in your mind to make a screenshot or however you want to do it, but try and annotate where you see the change in the state of delivery taking place. Try and see whether or not you're able to recognize where we're changing from sell to buy program. I hope that you paused the lecture, because I'm going to put on my lipstick. Here you can see my lipstick, and what I would like you to see is that first of all, I've annotated buy side liquidity resting above this high. This is my drawn liquidity for the buy program. This is the level I anticipate that price is going to be drawn towards like a magnet. Next to that, you can see that I've annotated this sales liquidity pool. And the reason why this sales liquidity pool is important is due to the fact that it formed right in advance of a key level. Pay attention to 18,000 right here. What I would like to see is that when we open up for this week, the weekly open is represented by this orange line right here. So the market displays lower. Do you see how this RECB formed right here? The market retraces into that RECB and then expands lower once again. Do you see how the market finds resistance inside of his old low, the sales liquidity pool? We see the market then expand lower aggressively, and notice that this sequence of imbalances get created. Once this sequence of imbalances gets created, what I'm monitoring is the following. What I'm monitoring is whether or not they're going to function as resistance on price. If these imbalances are going to function as resistance on price, then we are still bearish. However, the moment that price would displace above this sequence of imbalances and we would see them begin to function as support on price, then that would signal that the right side of the curve is currently unfolding. What do we know about the right side of the curve? What have I been outlining to you? When a bullish price cycle has started, what we're paying attention to is the creation to discount arrays on the right side of the curve. Do you see any discount arrays being created inside this delivery? I see one imbalance right here. I see a second imbalance right here. I see a third imbalance right here. I see a fourth imbalance right here. I see a gap being created right here. And that's how I can continue with outlining to you all the discount arrays which we utilized for expansion higher, retracement lower, expansion higher. What I would like to see is that when we go back to this initial CB which I had marked up for you, I would like you to see that inside of that CB this high formed. Why is this high in particular so important? Because this high formed inside of that CB and we saw the market display through it with a sequence of imbalances. Do you see how the market retraced back into this old high and into this CB before expanding higher aggressively? Must be random, right? What I would like you to understand, guys, is that what I'm sharing with you right here works across all markets, across all time frames, whether you're making a mega trade analysis where that's going to take you months to play out, or whether or not you're trading a 50-second chart of Nasdaq. It's all the same. Time and price are fractal. And that's the beauty of that what I'm teaching to you. And I promise that once you see this, once you understand what I'm actually showing to you, you will get a sense of calmness because you realize that this is what has been going on in front of your eyes all this time. And this system will never change. They will never be able to make any adjustments. They will never be able to go out here and say, oh, you know what, we're going to completely throw it around. No. Surely there might be some changes when it comes to timing elements or the time it takes to fulfill specific orders or how quick the market moves. So, for example, what you're seeing now is that the volatility is through the roof. But in general, the same concepts always apply. Why? Because this is how these markets are literally rigged. Once you start seeing this, you will never be able to unsee it. Think about it. How else am I able to call week in, week out, day in, day out these markets with such precision? If it was just buying and selling pressure, please explain to me how in this example which is in front of you, which is from the end of April, I was literally able to walk you through each day in real time throughout my market updates within the lectures on the mentorship platform or through my market updates on the mentorship forum. Outlined on Monday, sell program, Tuesday buy program, Wednesday buy program, Thursday buy program, and Friday also buy program. Think about it. It's because I recognize these price cycles. I recognize what the draw and liquidity is. Once you know higher time from institutional order flow, draw and liquidity, point of interest, everything else becomes clear as daylight. Start thinking in sequences because that is how IPTA is coded to deliver price. So a short little rant in between this lecture, I hope you don't mind. When we pay attention to bearish market structure then, what I would like to see is that when it comes to bearish market structure, what we can be looking at is we can be looking for the market to expand higher, form this high, retrace, and then have one more expansion leg higher. The moment that this swing high forms and we see the market displace below the low, which set up this final run above this old high, that is to us the confirmed change in the state of delivery. A change in the state of delivery can already be confirmed higher up. However, to play it safe, I would like you to start investigating this low being displaced through. The moment that we displace through that low, we would like to see it be utilized as resistance price. Meaning, the moment that we displace below this low right here, that's our change in state of delivery confirmed. And we now know price would change from buy program to sell program. Now I understand that some of you might be looking at the schematics which I've decided to put in this presentation. You might be thinking to yourself, but is there always a higher high or is there always a lower low within the bullish examples? No. And the reason why is because what could happen is that we see a failure swing taking place where a mitigation block gets created. If that occurs, look for intermarket relationship and whether or not the correlated or inversely correlated market actually did that full run, did that full manipulation leg, because that would be SMT of course. But in general, the moment that we displace below that low, which set up that final run higher, that is to us the change in state of delivery which has taken place. When we pay attention to the full example then within our market maker sell model, what I would like to start investigating is the following. Here you can see that we have an original consolidation. During this original consolidation, sales liquidity is being engineered right here. This is our draw liquidity. Notice that the market expands towards the upside and we see the bias of the curve deliver. Throughout this bias of the curve, what will happen is that multiple imbalances in the form of bullish for value gaps will form. We see the market eventually reach a point of interest, and once it reaches this point of interest, what we will be looking for is the reaction to that point of interest. The moment that the market displaces through this final imbalance, which formed right here, it's already the first sign that the underlying order flow is beginning to change from buy program to sell program. Buy side delivery, sell side delivery. The moment that price, however, displaces below this low, which set up this final run higher, that is when the CSD is truly confirmed, and that is the safest entry. This is why it's called the low risk sell within our market maker sell model. This low forms ideally in a bullish value gap on the left side of the curve. Why? Because then we not only have a bearish breaker right here, but we also have this bullish value gap which we can extend to the right and treat as an inversion of the value gap. If these two arrays are getting displaced through by the creation of a bearish value gap right here, a CB, that is when you have three different arrays forming in each other. And once you start thinking about time cycles and once you start thinking about the key levels, yep. And this is not like, I'm hinting at this now because this is not something which like I'm going to try out easy. It's simple as that. So some of you want to get to know exactly everything to the tick, and I definitely suggest you to pursue that path, but some of you just want to keep it simple, so to say. If you want to keep it simple, just stick to what I'm outlining to you here, but if you want to take it to another level, investigate previous cycle highs, previous cycle lows, and investigate the element of price. And when you start looking for the alignment, where these specific arrays are forming, you'll smile. When we pay attention to a chart example then, what you can see is that in front of you, you can see a market maker sell model with an original consolidation being down here, buy side of the curve, sell side of the curve. I would like you to pause this part of the lecture for a moment, and I would like you to highlight for yourself where the change in state of delivery took place. And I understand that this delivery might be tricky to look at, and that's exactly why I chose it, so that you can really dive deep into where this CSD got confirmed. I know that some of you never pass these lectures because you just want me to give you the answer. Honestly, just watching a lecture or just, like going through these lectures as if it's some type of Netflix series is not going to do you any well. You must treat it as if you're really studying. That is so important, guys. Right, I hope that you passed the lecture, because here I've added lipstick. What you can see is that I've outlined a bearish value gap. And this bearish value gap by itself doesn't really mean anything just yet. However, what I would like you to see is that when we pay attention to this delivery, what you can see is that the market was expanding towards the upside. This was very slow and there was a lot of back and forth going. Notice, however, that around 10 o'clock right here, you can see that we formed this imbalance. We see the market then expand higher, and notice that it slowly delivers towards the upside. It's in a very slow way being delivered higher. This is a high resistance liquidity run. What you can see is that eventually around 10:30, right here, the market forms this high, and we see it displace towards the downside with these large down close candles. The market retraces, right here, and consolidation is taking place. We then see the market expand towards the downside, and this is where our first fair value gap is being created, right here. Do you see that this fair value gap is being created once the market displaces below the low, which set up this retracement higher and this consolidation? That's a crucial algorithmic signature, because from that moment in time, you need to see this CB function as resistance price. Therefore, I'm anticipating the moment that I see the market expand away from that CB, that we are in fact now in a sell program, that it is confirmed. However, when you pay attention to the left side of the curve, it isn't really clear yet how you can utilize inversion value gaps to basically gouge the order flow, except for this imbalance right here. Whenever that's the case, I'm giving you the tip now to zoom into a lower time frame. So in front of you, you can see the 1 minute time frame of Nasdaq. We're now going to drop into the 15 seconds. Here on the 15 second time frame of Nasdaq, and when we pay attention to that same delivery which occurred around 10 o'clock in particular, you can see that all of a sudden there's a sequence of imbalances which is very clear right here. Do you see how the market tapped that sequence of imbalances multiple times? And when I mention sequence of imbalances, I'm literally meaning this full area in which we saw 3 imbalances in a row form. Imbalance 1, imbalance 2, imbalance 3. I'm extending that full range to the right. Do you see how the market tapped that range multiple times throughout this delivery? Here, 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 and here something interesting occurs. Do you see that we retrace into that higher bull-shaded box, which was that 1 minute CB? Do you see that we form a high in that area and then displace towards the downside? Do you see how we expand lower? And here something important occurs. Do you see how the market reprices outside of the range of this sequence of imbalances and how it retraces into the imbalance which got created throughout this expansion leg through that sequence of imbalance on the left side of the curve? Yep. Hidden in plain sight, only visible for those that know what to look for. So again, if you do not see any imbalances on the time frame that you are looking at the markets at, zoom into a lower time frame, because I promise they're going to be there. And when you extend them to the right, you are going to see their importance. What I would like you to do, now that we've come to the end of this lecture, is I would like you to literally go into your charts and would like you to collect as many examples as possible of a change in the state of delivery taking place. The way that I suggest you to do this is to literally just go to a blank chart, doesn't matter what market it is, but just go to a blank chart and pay attention to how the left side of the curve influence the right side of the curve within a market reversal. If you start paying attention to the prior steps which I've outlined throughout this model series as well, you are going to smile. We are going to expand upon this information moving forward, but I've dropped many gems throughout this lecture and I really suggest you to dive deeper into it. I want to wish you good luck in your studies and look forward to speaking to you soon again. Be safe!